We have Nani here with a quick question. Wants to learn a little bit more about hedging, exactly what is hedging, and how traders use it to gain an edge in the market. So, thanks for the question. Now, hedging generally takes a couple of different forms. I do like a recent example I heard from a trader that basically compared hedging to buying car insurance. So, obviously, when you buy car insurance, you are actually just buying protection in case that you crash your car. And in the same way, a hedge in trading just means that you're buying yourself some protection in case a trade goes against you. So let's say you're in a position, let's just take the pound versus the US dollar as an example. Let's say that you are trading this to the downside as a swing trade, right? So you expect downside for the pound, and let's just say that you entered, um, let's say that you entered from this pullback area over here, and you're now trading this to the downside as a swing trade. Now, for whatever the fundamental reason might be. Now, imagine that in the short term, something happens that creates either some dollar weakness or maybe some short term pound strength, or maybe a little bit of both. So there's some short term expectation that you might see this trade going against you. Now, as a swing trader, you can either let the trade just play out and leave your trade as is because you're still trading in line with the bigger picture fundamentals, or you can try to buy some protection on that trade by taking a hedge, meaning that you can take a short-term buy trade on the pound versus the US dollar, or you can even hedge by actually buying a call option in the options market on the pound versus the US dollar. Now, some traders will also look to or like to hedge themselves by increasing their exposure on other pairs as well. So, for example, we want to be selling the pound versus the US dollar, so we have expectations for the pound to go down, but we might decide to hedge, against the US dollar specifically, and we can also decide to buy something like the euro pound. So we're expecting pound weakness, but we can offset, the risk of the US dollar, weakening as well by basically buying the euro pound as well. So we're still expecting pound weakness, but we are now hedging our risk by trading the pound against the dollar and the euro. Another form of hedging in line of what we just mentioned is basket trading. So almost like we just mentioned, it's where let's say there's a significant sentiment shift that occurs in the market, and we think there's going to be lots of pound downside. Or let's say the market, something massive happens, and there's a very positive sentiment shift in the euro to the upside. Now, what some traders might like to do, also as a form of hedging, but it's called basket trading, is basically to buy the euro against a basket of the other majors. So imagine that we have that massive positive thing happening on the euro, and now you decide not to just buy something like the euro dollar, but you buy the euro dollar, the euro CAD, euro Aussie, euro pound, euro Kiwi, euro yen. So obviously you need to keep your risk still low. So you're not going to have full risk on all of them. So you're reducing your risk. But the idea is that you're basically diversifying or hedging against a possible scenario where you're trading the euro against just one currency, and suddenly that one currency starts to strengthen against the euro as well. So there are many ways that traders can hedge positions in the market. But just as a word of caution, this isn't really something that you want to do without lots and lots of trading experience and understanding of how of all the risks involved with trading this way. If hedging is done right, it can really protect against any unwanted volatility swings, especially if you're trading around a core position like a swing trade. But done incorrectly, I mean, can really cause substantial damage to your account. So, it's not really something that you'll want to be doing as a beginner trader. Obviously, I don't know where you are in your trading journey, whether you are a seasoned or a veteran trader. But if you're a beginner, it's definitely something that I'll be very, very careful with. Also, keep in mind that some brokers might not even allow you to hedge. So if it is something that you are looking into, make sure that your broker actually allows it in the first place. But again, even if they do allow it, this is something that you want to make sure that you fully understand how to handle and trade successfully. So I hope that helps with the question. Any other questions, as always, make sure to let us know.